Hi, my name is David Pereira, and I'm the founder of Rent-A-Grow Homes. We're a rent-to-own operating company. And I get a lot of questions every day about our program. How does it work? How do I get started? Do I get to pick my own house? And so we put together a list of the most 20 common questions that we get and provided answers in video format. So I hope you'll find this helpful. Let's get started. So the first question that we get is, what is rent-to-own? So a good way to think about it is that it's a program that's meant to help today's renters that have great jobs, get good income, but they can't get a mortgage from the bank today. If you tried to get a mortgage from the bank, they would say no, and it's usually for two reasons. Number one is your credit score isn't high enough. Number two, you don't have enough down payment saved up. So this program is meant to help that type of renter. Now, what we do is we provide a bridge of time. Usually it's a 3-year deal, so it's a 3-year program, and over those 3 years, we give you the tools and the instructions on improving your credit, raising your down payment, and during these 3 years, you're living in the home that you're eventually going to buy. Another common question I get is, am I a good fit for rent-to-own? Well, here are 6 things to think about, and if you can check all these boxes, you are a good fit. Number one, you want a home of between $300,000 to $800,000 in Ontario. Number two, your pre-tax or gross income for the household is at least $90,000, and this needs to be mainly from employment. Number three, you've got no criminal history, you don't have accounts that are currently in collections, you've taken care of all that stuff, and if you had a consumer proposal or any bankruptcy, you're at least 3 years behind that. So everything has been completed 3 years, at least 3 years ago. Number four, you've saved up at least $10,000 for a down payment. Number five, you're going to be paying normal rent for those first 3 years, but you're also going to be paying this additional amount called an option credit. It's usually $350 to $600, and that's exactly how you save up for a larger down payment down the road. And number six, you're committed to staying in this house and in this program for at least 3 years. This is not meant to be a short-term fix. This is meant to be a program that gets you into home ownership, and the house that you're choosing to live in should be the home you want to live in for quite some time. All right, let's talk about who's involved in a rent-to-own deal. There's typically 4 parties. Number one is the tenant buyer. The tenant buyer is the renter or the tenant who eventually wants to be a buyer. Number two is the investor. The investor is the individual who's going to buy the home today and then sell it back to the tenant buyer in 3 years' time. Number three is the realtor. The realtor is who the tenant buyer is working with to find the house. And number four is the rent-to-own operator. That's me. And what I do is I basically make sure that everything is working. So I take care of all the contracts. I check in with the tenant buyer, answer any questions, check in with the investor, and make sure that everything runs smoothly over the 3 years so that we all get to the finish line together. All right, so how does our program work? Well, step one is we qualify you, the tenant buyer. So we're very much about tenant first, which means we want to make sure we're working with great people. We will have several conversations. We'll look at your financials, collect your paperwork, pull your credit score, and based on your overall profile, we'll determine whether you're a good fit for the program. If you are a good fit for the program, then we give you a budget. And you move on to step two, where you work with your realtor, you tell them the budget, and you go house shopping. You go to open houses, you look at homes, you check the MLS listings, and once you find a home that you really like, you let me know, and then we will arrange to make the purchase. So step three, the purchase of the home, our investor is the one who's going to actually buy the home for you. And what they do is they work with your realtor, they fill in the forms, and we place an offer on the home conditional upon inspection. The reason we do that inspection is to make sure we're getting a good home. Now, assuming everything goes well with the inspection and we all move forward, then we're almost at move-in day. And before that, obviously the down payment has to be made to the bank. So the investor is going to take care of most of the down payment, but we require our tenant buyers to put in at least 2% of the down payment or $10,000. Now, step four, earning the home. The reason I say earning the home is because you're living in the home during this time, but you're earning your down payment. Each month you're paying rent, but you're also paying this additional amount called the option credit, And that's how you're going to have enough money at the end of 3 years to buy the home. And lastly, step 5, you own the home. So after 3 years, you're already living in the home. Your credit score has gone up. You have enough of a down payment. And now it's an easy legal transaction for the investor to sell the house to you. All right, let's talk about what you need to get started. So number 1, income is important. You need to have good employment with a pre-tax or gross annual household income of at least $90,000. With $90,000, you can start looking at homes of around $300,000. Obviously, the more money you make, the higher your budget is. You've saved at least $10,000 for down payment. Now, if you've only saved $5,000 or $6,000, I would still suggest to get in touch with me because the process can take a couple of months. And during those couple of months, you can continue to save more money. So if you're well on your way to saving $10,000, please get in touch. No major outstanding debts. So we want to make sure you don't owe the government a lot of money. You don't owe any credit card companies a lot of money. You don't owe any of these cashback places or fast money places a lot of money. So it's really important that you've got pretty good control of your debts. It's fine if you have a car payment, your usual monthly cable bill, cell phone bill, that's totally fine. But the major stuff, we want to make sure that you've got a good handle on that. Number 4 is a willingness to follow a plan. So we're going to put a plan together for you to raise your down payment to improve your credit score. And you need to be willing to follow those steps. And lastly, I would suggest to get your paperwork in order. So it's the same paperwork that you would take to the bank if you want to get a mortgage. It's your tax returns for the last couple of years. It's your notice of assessments, your pay stubs, your employment letters, all those things that basically provide your financial picture. Those are the things that we need to look at as well when we're trying to put together a budget for you. So what is the budget for your house? Well, a good way to kind of get an estimate for that is use the rule of 4. You multiply your household pre-tax income by 4 to get an estimate of what you can afford. Now, this assumes that you don't have a lot of debt or a lot of large monthly payments. So an example is if you're making a combined income of $100,000, then your budget would be around $400,000. So basically just multiply your income by 4. How much money do I need to start the rent-to-own program? So we look for a down payment of at least $10,000 or 2% of the purchase price, whatever is higher. The reason that we do this is that it demonstrates your ability to save towards an important goal. If you're starting with literally $0 or $2,000 saved, you're probably not going to be successful in this program because this program requires you to get to the finish line with enough down payment to buy a home. If you're going to buy a home of, let's say, $400,000 in 3 years, you're going to need 5% of that. You're going to need legal land transfer. You're probably going to need $25,000 to $30,000. If you're starting at 0, it's tough to get there. But if you're starting at $10,000 and you've proven to yourself that you can save money, then you've got a good head start, and we know you're much more likely to be successful. Now, that money would be due a few weeks before you move in. So after the offer on the house is accepted, we know that you're going to be moving in. We know we're going to buy the house. As the bank starts to require that down payment, that is when we will need your down payment. And of course, there's lots of record keeping. You'll get a receipt. So it's all very clear that you've contributed your amount to this down payment. How long does the program last for? So typically it is a 3-year program, but we're flexible. And if you're able to do the program in 2 years, or if you need to extend it to 4 or 5 years, we can work with you. How is the future house price determined? So we generally assume a 5% annual appreciation. So this means that if you were to be in a market where the home price is $400,000 today, and we assume 5% per year for 3 years, it's about 15% over 3 years. If you multiply 15 by 400,000, it's about 60,000. So that means the future home price in 3 years will be 460. Now, we only operate in markets where this is a reasonable assumption. We don't do rent to own in Toronto area in the GTA because the house prices here fluctuate a lot. And there's no certainty that the house prices will go up 15%. However, there are lots of markets in Ontario where this is a likelihood. Cornwall, Ontario is a good example where there's a lot of immigration happening. There's low housing supply. There's good jobs and people are moving to the city. This means home prices will go up because demand is up. So in any sort of markets in Ontario where those good market dynamics exist, we're happy to operate there, and we use a 5% annual appreciation. Do I get to choose the house? So the answer is yes. We don't choose the house, we choose you. And once we choose you and give you a budget, you get to pick the house that you want to live in. Now, there are some rules that we ask you to abide by. Number one is please live in a city or look in a city or a town that has a population of over 10,000. The reason we want to avoid rural areas is because it's really hard to see a lot of volume there, and therefore home prices can fluctuate really strangely. We obviously want to live in a town where home prices are kind of naturally growing, and if it's rural and there's not a lot of deals to be had, then we don't know if we're going to get that future home price. But it can be a single family home, it can be a detached, a semi, a condo, and it must be on municipal infrastructure. So municipal water, no well, no septic. The reason for this, I don't want any surprises with some expenses that we have not forecast for. A big thing about rent to own is predictability. And so some of these rules have been placed in order to ensure we've got predictable pricing. Here are 3 examples of homes that our tenant buyers recently have purchased. So we have 3 tenant buyers in each of these homes. These are the homes they're currently living in. And in 3 years, in a couple of cases, they're 4 years, they will be owning these homes. So the homes that they're purchasing are really nice homes, good sort of suburban neighborhoods, parks. A lot of these tenant buyers have children, so that's obviously a big consideration for them. So I thought I'd include this to give you a sense of the kinds of homes that our tenant buyers are living in. Where do I find available houses? So once we give you a budget, you work with your realtor. You'll go and look at open houses, you'll go check out places. Your realtor will probably send you email listings of homes that are available within your budget. One condition here is the home must be vacant upon possession. What that means is it's already vacant already, or the owner who's living in the home is definitely going to move out. What I want to avoid is having to kick any renters out of their home. So we really insist on vacant upon possession. How much do I pay monthly? So there are 3 components, and most renters are already paying rent plus utilities. The only thing we're adding here is that option credit. And that option credit is that thing that allows you to save for your down payment. Now, the way we do rent is actually it's a little bit below market rent. So in some of the areas we operate, let's assume the market rent was $2,300. We may charge $2,150 or $2,200, so you'll get a little bit of a discount there. And then the option credit, again, that's how you're going to save in the future for your down payment. So let's assume you're paying $500 a month for 3 years. 500 times 12 months is 6,000, times 3 years is 18,000. So by paying $500 a month, all of a sudden you're saving an additional $18,000 plus that original $10,000 you put down. So now you've got $28,000. So that's the reason for the option credit. It allows you to go from a number like $10K to $28,000 over 3 years in a nice, systematic, predictable way. What if my credit is really bad? Well, 3 years is plenty of time for you to fix your credit score. How we'll do this is we'll connect you with a credit counselor who's going to write a plan up for you and then is going to keep you accountable by meeting with you every 6 months. So every 6 months, you're going to bring your tax returns, your pay stubs, your bank statements, your credit card statements. They're going to pull your credit score and they're going to check that you're on track. And then they're going to let me know that you're on track, or they're going to tell me something didn't go right these last 6 months. They bought a truck, they bought an RV, they did something they shouldn't do. The reason we do this is we want to make sure you make it to the finish line, and we don't want any surprises at the end. So if there are some negative surprises, I want to catch those early and fix them so we can get you on the right track. Can I make changes to the home? So the answer is generally yes. We want you to treat the home like it's yours because it will be yours in 3 years' time. Now, we do ask that you get approval on the changes you want to make, but we're generally always going to say yes, as long as it doesn't reduce the value of the home. So some of the changes that our tenant buyers have made is they've put in a fence, they've put in a garden in the basement, they've removed kind of old flooring, put in new carpet, painted the house. So anything that is going to make it feel like more like home for you, we're fine with, as long as it doesn't change the value of the home in a negative way. What is the tenant buyer responsible for? So our tenant buyers are responsible for all utilities, repairs and maintenance, and snow and lawn care for their home. What are some of the other benefits of the rent-to-own program? So there's quite a few benefits. The first one is that you don't have to worry during the 3 years of the landlord or the investor selling. This home is yours. You are safely in there for 3 years, and the only person that's going to buy the home is you in the future. Number two, your rent and your option credit remains constant over the entire 3 years. So you don't have to worry about your rent going up every year. Your credit score is going to grow over the time in your program because we'll put you with that credit counselor. And that's a really big thing because anytime you need to purchase something big, whether it's a home, it's a car, it's a boat, getting a new cell phone sometimes, you need to have good credit score. And so having a good credit score opens up a lot of opportunities. Your down payment grows. So I mentioned that we help a lot of our tenant buyers get from $10,000 to $30,000 over the course of 3 years. And $30,000 may sound like a big number, but if you sort of take a bite every month and just do what you're supposed to do every month and contribute $500, that number adds up very, very quickly. And overall, you and your family have stability. Again, you don't have to worry about moving. You get to sort of plant roots, plant a garden. Your kids are in school. They stay in that school for 3 years at least. And you really feel like you're part of the community. And that's a big deal. I know a lot of tenant buyers, they're going to look at the community that they're moving into and decide, do we want to be here for 3 years? So I know a lot of them are really happy and their families are happy that they get to have stability over the course of the program. All right, let's talk about risks. So what's the risk to our tenant buyers? So the risks are really if you're not a good tenant, that's where the risks really kind of occur. So you breach the contract or you can't qualify for the mortgage after 3 years. So let's go into this a little bit deeper. What does breach the contract mean? Well, really it's if you're late on paying rent or the option credit, or you don't pay it, or you damage the home. Both of these things are just unacceptable, right? So we're looking for good tenant buyers that are going to take care of the home, pay on time, and communicate well. If you do those three things, there's no problems. But if you don't do those things, then there is a problem. And in the contract, the option to purchase contract, there's a clause that says if you are late on paying rent or the option credit, or you cause damage to the home, you're at risk of at risk of forfeiting up to 90% of your initial down payment or your option credits. So that's a big amount. And that's actually no different than dealing with the bank. If you don't pay your mortgage, you're at risk of losing your home. With us, you're at risk of losing a huge chunk of your down payment. So again, we want people who are going to take care of their homes. And if you do that, there's no problems at all. Why wouldn't I be able to qualify for the home after 3 years? So there's two ways this could work. Number one is you didn't really stick to the plan we gave you, and now your down payment isn't large enough, or you don't have a credit score that's good enough, and the bank is saying no. If it's clear that this is the reason and that you didn't do the work, then it's to the discretion of the investor and myself on how much of your down payment should be returned to you. So over this time, you've, again, put the $10,000 down, you've put in another $20,000, now we're at the end, and you can't qualify because you're short or because you don't have a credit score. So we may have to kind of come to an agreement with you, but it's really to the discretion of the investor and myself as to how much money we return to you. The other situation is you did everything right. You made your payments on time. You did everything you could to raise your credit score. Your credit score is in the 700s, but the bank says no because the market changed and we just can't get the appraisal that we need. So if that's the case and you've done everything correct, then we've got other options. We can extend the contract by a year and adjust the price up by another 3%, and hopefully the market catches up and we get the appraisal we want. There's also other options that if you want to leave, we would give you a good chunk of your down payment back. So there's different options to work with here. But obviously the big difference is what's the reason you can't qualify? Is it something you did or did not do? Or is it really market dynamics? And based on that, we'll come up with an appropriate and fair solution. So the last question is, how do I get started? So I would invite you to check out our website, rent2growhomes.com. Check out the different pages. There's a page for tenant buyers. There's examples there. Click on Get Approved in the top right corner. And if you fill in the form that's on that page, I'll get back to you very quickly. And I'm happy to talk to you about how we might be able to help you get on the path of homeownership.